very warm welcome to Moneycontrol.com. It's a lovely sunny day. In fact, for the last 2 years, India and the world have gone through an upheaval. But what's not very heartening is that 2023 is also looking rather grim. As the world braces up for a recession, we have with us one of India's finest financial minds who understands policy and its intersection with markets, with finance, with economy. Mr. Jayant Sinha, he's also the chair of the Parliamentary Committee on Finance and a member of Parliament. Mr. Sinha, thank you so much for joining us. Let me begin by asking you, is 2023 looking rather dull from an India point of view, or do you think we're going to have our spot in the sun?
We are definitely going to be a bright spot in the global economy. If you look at the global economy, of course, is dealing with 2 or 3 major sort of upheavals, as you correctly pointed out. We still have the war in Ukraine going on, and that, of course, has resulted in a commodity price shock and, of course, real challenges to the global order. In addition to that, the Fed and other central banks are going through a very abrupt tightening cycle, and now the view is pretty much that we're going to have a hard landing as a result of that in the global economy.
Right.
So that's a second major factor. And the third major factor is that China is still sorting out how it has to deal with COVID, and so the end game for them as far as COVID is concerned is still up in the air. So this makes it a very difficult and complicated backdrop for India. India, though, of course, has done extraordinarily well in terms of all of our macroeconomic parameters. Growth going into next year is very strong right now. We are somewhere between 6.5% and 7% this fiscal year. And next year, if it was not for these global issues, we would have done probably close to 7% or if not more. But because of these global factors, that will of course be something that will have an effect on our growth. How much it's going to be, nobody knows at this stage.
Nobody knows. That's true. We are dealing with a lot of uncertainty, but we're also going to be presenting our budget, the last one before the general elections. And you're chairing the committee that gives a lot of recommendations on what should be done. In your view, what should the priorities for the Indian government be at this point, considering the situation that India is in? Our macros are looking good, but we're not completely out of the woods yet. We are facing strong global headwinds. What do you think should be our priorities?
Well, the Honorable Finance Minister and the Honorable Prime Minister have steered the ship really, really well through these very difficult times. So I think they just need to stay the course. And there are 3 or 4 areas which they have prioritized, and I think they should continue to do that. Number one, we have to continue to provide support to vulnerable populations.
Okay.
We've done that through the Pradhan Mantri Garib Kalyan Yojana. We've done that through the fertilizer subsidies. We've done that through a big support for Narega and so on. So support for vulnerable populations, which of course has driven up our fiscal deficit, but is still required given the commodity price shock that I spoke about earlier. So that's number one priority. Support for vulnerable populations. Second important priority is continuing on the reform measures and really putting in place a very forward-looking industrial policy. And that's coming through the PLI scheme, that's coming through our commitment to climate change and what we're trying to do to green our economy. So I think that's the second area, which is really a very forward-looking industrial policy. The third area, of course, that the government has been emphasizing, correctly so, has been significant capital expenditure. So capital expenditure over the last year or two has gone up by 1 or 2% points of GDP, which is a substantial number. And that, of course, has meant that many sectors of the economy, like construction, like steel, like cement, have done extremely well because of the infrastructure spending that the government has done. And then finally, what we've also tried to do through all of this is to ensure that we have a happy balance between growth and inflation, right? So it's the macroeconomic management, looking at the currency, looking at the fiscal deficit, looking at, of course, where we are with respect to inflation. So here again, we have to stay the course. And of course, the Honorable Finance Minister just mentioned in Parliament that she's committed to the fiscal glide path. We have really deftly and very, very, competently managed all of this so far. And I think that's what we should do coming up in this budget. That being said, it is after all an election year.
Absolutely.
And I'm sure, the Honorable Prime Minister and the Honorable Finance Minister have a few very, very positive policies or programs that they're thinking of for the people of our country.
So, are you suggesting, Mr. Sinha, that this could be the budget where the finance minister and the prime minister, the government opens up their purse strings further to spread some cheer? Because the last 2 years, the one thing that's constantly been, held against the finance minister is that she's been very fiscally tight, in the sense that she's not spelt out that feel-good factor. They've taken care of people at the bottom of the pyramid, but the feel-good factor has been missing. Consumption has not really picked up. So are you suggesting that that could be on the cards?
I think we are certainly going to take some important policy decisions with respect to the feel-good side. Of course, that has to be done in a fiscally prudent way. The Honorable Prime Minister has spoken against the revelry culture.
Sure.
So I'm sure it will be done in a way that is fiscally very prudent and is forward-looking, but at the same time really does help on the feel-good side. We have, of course, really created a turnaround in the economy, and certainly if you see our airports, if you see our hotels, if you see a lot of middle class consumption, I think those numbers are trending in a very positive way. So I think a lot of feel good has already happened, and I think we'll sustain it and do even better going forward.
In terms of tax reforms, the government has been proactive in reducing corporate tax rates, but when it comes to personal income tax rates, do we expect some simplification? Do we expect a revision there? Do we expect some tax breaks?
Well, there's been discussion in my committee as well. We've talked multiple times about creating a much more level playing field for capital gains. Obviously, we know that capital gains in the public markets are treated differently from the private market, so there has to be some equalization there. So I think on capital gains there's work to be done. On personal income taxes, of course, there is just the standard work you have to do in terms of inflation adjustment and so on. So that I think would also be a welcome set of revisions. That being said, we'll have to wait for the Honorable Finance Minister and the Prime Minister to see what decisions they make on personal income taxes.
Right. So on the capital gains tax, Mr. Sinha, could you give us a little bit more detail? What are the concerns that you've come across, and what are the changes that you think would enable more investments and would spur demand?
So we have a very good sort of capital gains regime when it comes to the public markets. And in the public markets, your holding period is relatively short, just a year, and then you have a pretty low capital gains tax rate. That's not the case for private markets. So if you're an angel investor and you're investing in a startup, for example, then your holding periods are much longer. They're 3 years, and you pay a higher capital gains tax rate. So I think there we should do an adjustment so that they are on the same level playing field, and so that our startups can get more capital, particularly from high net worth individuals, from angel investors, and then they can receive the benefits of that money coming in, because the startup ecosystem is our great strength, our great joy, and of course we've done extraordinarily well, and we will continue to need the innovation and the entrepreneurial spirit of our startups to really drive this economy forward. So I think we should absolutely see what we can do to levelize capital gains in our private markets as well. There are certain carve-outs and so on for real estate, etc., where you of course already are adjusting for inflation and so on. That can be carved out, but certainly for investments in the private markets, where even if you're investing through a fund and so on, like an AIF, you're still paying these higher tax rates.
Right.
I think that can be adjusted. In fact, in our committee, we had proposed that just like mutual funds get these lower capital gains tax rates, if you're investing through an AIF, for example, which is also well regulated and high standards of disclosure and compliance, then you could have the same kind of taxes that you get when you invest in mutual funds. So why not do that? And then in addition to that, we had also suggested that AIFs should also be allowed to list on the stock exchange as well. So that way we will be able to attract more domestic capital in particular to our startups and to many other forms of financing that we require in our private market. So I think some of these kinds of steps for capital gains I think can make a very big difference to India's startup ecosystem.
Do you think inflation is under control, and the next monster that we need to tackle is private investments?
Inflation, of course, is going to come down, I believe, because the Fed and others have launched a pretty dramatic tightening cycle, which has compressed demand very significantly in the developed countries, in the OECD countries, and as a result of that, because demand is down, you're already seeing that with oil prices. Oil prices had got close to $100 a barrel, but they're down to about $80 a barrel because of the tremendous compression, demand compression that's happening with the Fed, and that's obviously reducing the consumption of oil, for example, and I think that will happen in other commodities as well. So some of this commodity price shock that we've seen is going to fade away. Obviously the base effect will kick in, so you'll see less inflation just simply because base prices are higher, so that's a second factor. And I think supply chains are also catching up. We had a lot of price shocks because there were problems with supply chain, semiconductor prices had gone up dramatically and so on. So with the supply chains catching up, I think you're going to see far lower inflation going forward. The Reserve Bank of India, of course, has done a terrific job in managing both its tightening cycle and keeping inflation where it is. And in India, inflation tends to be very volatile because a lot of inflation is coming from vegetable prices, which of course are affected by the climate and the weather. But all in all, I think to your question, will inflation come down next year? Yes, inflation will come down next year is my own view. But in terms of just the pure economics of the situation, the demand and supply balances, I think those are going to really help us reduce inflation next year.
Okay, but when it comes to private investment, how can the budget address investments going up in the economy? Because we've seen revision of corporate tax rates, but that's not really translated into a lot of economic activity on ground by the private sector. Do you think this budget can do something, or now the ball is in the court of companies?
No, I'm very hopeful on private sector investment, and that really is the last missing piece for robust economic growth for India. Because as I said, we've done a lot of things right with respect to policies. We've got tax rates that are very competitive. The government has done its bit in terms of really pushing public investment. And now if we can get this last sort of set of investments, private sector investments to happen, then that really puts us on a very robust growth trajectory. And there I think, as I said earlier, if we can levelize and make sure capital gains, public markets, private markets on the same level footing, I think that will be very, very helpful to us to get more private sector investment.
Okay.
And of course, now that the banks are in a situation where they have largely got through their NPA troubles, and we've got a much better framework for dealing with these default issues through the insolvency and bankruptcy process, through the ARCs and so on. So NPAs, I think, are under control. Credit growth is accelerating. And finally, as the RBI and others have noted, which is that capacity utilization now is coming to the point, at the 80% level, where private sector companies do want to add capacity. Okay. We've just seen that, Air India is thinking of a very large order of planes because aviation has rebounded. And if the Tatas put in, an order for 500 planes, that's a very, very big boost to private sector investment, for example. Now, part of the problem we also have to recognize is that a lot of assets now are being leased as opposed to purchased, like for example in aviation. And so when these planes are leased, it doesn't really show up as private sector capex, even though it is genuinely capex because we are getting these assets. And typically aircraft leasing, because of my experience in the aviation ministry, aircraft leasing happens outside of India. So most people lease aircraft from Ireland or sometimes in Hong Kong. So it shows up on their balance sheet because it's owned by those aircraft leasing companies. Right. But it's actually a capital asset that we have here in India that we're using. So there's a little bit of an accounting issue as well as to how to think about leasing as such. Okay. But certainly as far as aircraft leasing is concerned, that's not showing up as private sector capex as far as India is concerned.
Okay. In terms of revenues, for 23-24, what's your prescription for the government to tap into different sources of revenues? Because we do know that globally growth is slowing, exporters are hurting. So what are the other options for the government? What can they capitalize on?
There's not a lot, Shweta, because we've spent a lot of time trying to understand, where are there better ways of generating revenue. Compliance is probably one of the best sources of that. Okay. And there again, the strong compliance efforts for the GST have really helped in taking up GST now to almost 1.5 lakh crores a month, which is extraordinary, of course. A lot of that has come from better compliance. Similarly, there's another area where there are a lot of outstanding possibilities for revenue, but that is much more of a one-time thing, which is outstanding litigation. So there's a lot of tax litigation that's out there, and because of that, people haven't quite paid up all of their tax liabilities, and so that is another area where we can do more with respect to revenue generation. But otherwise, because of the formalization of the economy that's happened, because we are largely paying now all of our transactions through UPI and through digital means and so on, all the work the government has done to be able to figure out who's spending money, where the consumption is happening, all of that now has resulted in a situation where tax revenues are now quite transparent, quite clear where we have to work, and in fact that's part of the reason why our tax revenues have gone up as much as they have, either on the GST side or on direct taxes as well.
So the options that the government has right now to tap into?
Well, it's really hard to see in terms of tax revenue what more we can do, right? Because there, as I said, we've improved compliance, we've digitized, we've formalized.
So no new taxes, you're not proposing
that
any
of course
new
the Honorable
taxes.
Prime Minister and Honorable Finance Minister will decide in the budget. Where of course we can do more in terms of revenue generation is through disinvestment. And there's obviously a number of assets that have been in the disinvestment queue, like BPCL, like Concor, like IDBI Bank. So hopefully we can have more action there. So we'll have to see. Disinvestment remains a big opportunity for revenue generation.
Okay. A few years ago, Mr. Jaitley in his budget had, not in his budget, but before the budget, there was this talk about a wealth tax. Could that make a comeback in this budget?
That of course the Honorable Prime Minister and Honorable Finance Minister can decide. I don't want to speculate on budgetary matters because of course they're very confidential, as you know.
Okay, lots of work, Mr. Sinha. Anything that you'd like to say for our viewers for 2023? Anything that you think is going to be the big mantra for 2023?
Well, at the end of the year, Shweta, as you know, we always say to all our family and friends, peace and blessings for the new year. In the year 2023, peace is going to be very, very important for us because of the terrible war that's going on in the Ukraine. And of course, if you think of it from a humanitarian perspective, it's a terrible tragedy what has happened there. And of course, we've had lots of extreme weather events, the flooding in Pakistan and so on. So peace, tranquility, happiness, I think in 23 will be particularly important.
Okay, well, here's to peace and prosperity. Thank you very much and all the very best. Thank you so much for taking out the time.
Thank you.